So, if you've been following the tech world in 2026, you've probably heard the name Fractal Analytics. It's one of the most talked about public offerings out there, and today we're going to unpack exactly what's driving all the excitement. So, what's all the fuss about? Well, it really boils down to this one big question. Is this India's first true pure-play AI company to hit the public market? That's the story that's fueling so much interest, and it's what we're here to figure out. All right, so in this deep dive, we're going to break it all down for you. We'll look at the numbers, the potential upside, and yeah, the risks too. The goal here is to give you a really clear, balanced picture of what's going on. Okay, first things first. Before we get into the whole bull versus bear debate, we've got to get a handle on the basic numbers. These are the non-negotiables, the essential details you need to know. All right, get your calendars out because this is all happening pretty fast. The subscription window opens up February 9th and closes on the 11th. And then the tentative listing on the exchanges is just a few days later, on February 16th. Like I said, a really quick turnaround. So let's dig into the snapshot of the IPO itself. The price band they're looking at is somewhere between 857 and 900 rupees a share. For a retail investor, that means the minimum you'd put in is about 14,400 rupees. All in all, the company's aiming to raise around 2,834 crore. Now, this is really important. You always want to know where the money from an IPO is actually going. In this case, about 1,000 crore is a fresh issue. That's new money that goes straight into Fractal's pockets to help them grow. But the bigger slice of the pie, over 1,800 crore, is an offer for sale. That's basically existing shareholders cashing out. This split tells you a whole lot about what's motivating this IPO. Okay, so with the numbers out of the way, let's talk about the exciting part. Why are so many investors optimistic? Let's dive into the bull case for Fractal. The whole bull case, the argument for why you should be excited, really comes down to four main points. First, and this is the big one, it's being pitched as India's first pure-play AI stock. Second, they've already got a solid list of big-named global clients, which means their revenue is pretty stable. Third, you've got major players like Goldman Sachs showing a ton of interest. And finally, that fresh capital we talked about, it's going right into reducing debt and fueling more growth. Pretty solid arguments. You know, we've thrown that term around a couple of times now, pure play AI. So what does it actually mean? It's pretty simple, really. It just means a company whose main business, their entire focus, is on artificial intelligence. And for investors, that's a huge deal. Why? Because it gives you direct exposure to the AI sector's growth without it being watered down by other stuff. It's a focused bet on the future of AI. All right, but we can't just look at the good stuff, right? For a complete picture, you absolutely have to understand the risks. So let's flip the coin and look at the bear case, the reasons you might want to be a little cautious here. And right off the bat, there's a big number that's raising some eyebrows. Negative 26%. The IPO price is actually 26% lower than what the company was valued at in its last private funding round. So what does that tell us? It suggests that while private investors were super bullish, the public markets are being way more cautious about AI company valuations right now. And this really gets to the heart of the debate around Fractal's valuation. On one side, you have what's called the AI scarcity premium. The idea here is that because there are so few pure AI stocks out there, investors are willing to pay a little extra for it. But on the other side of the argument, you have people looking at the fundamentals, the actual financial performance, and saying, hey, this price might be a bit too high for what the company is actually earning right now. And it's not just about the valuation. There are a few other things to keep an eye on. For one, the overall market for IPOs in early 2026 has been kind of lukewarm. Another point is revenue concentration. A big chunk of their money comes from just a handful of big clients. If they lose one, that's a problem. And finally, that initial hype, the buzz around the listing, it seems to be quieting down a bit. Yeah, speaking of that buzz, let's talk about the gray market premium, or GMP. It's kind of like an informal early poll of what people think the stock will do on day one. Initially, it was sitting around 20%, which is pretty healthy. But lately, reports are saying that number has cooled off. It's just a good reminder that short-term hype can change on a dime. Okay, so we've looked at the good, we've looked at the bad, we've weighed the bull case against the bear case. So what does this all mean for you as a potential investor? Let's try to connect all this info to a few different investment styles. Think about what kind of investor you are. If you're in it for the long haul, a growth seeker, then yeah, this could be a really interesting bet on the future of enterprise AI. If you're more of a short-term trader, well, be ready for a roller coaster. It's going to be volatile, so you'll need to watch the market dynamics like a hawk. For all the value investors out there, you're going to have to do your homework and really scrutinize those valuations. And if you're a risk-averse investor, honestly, this might be one to watch from the sidelines. Tech IPOs can swing wildly, and this is definitely in the high-risk category. So when you boil it all down, what are we looking at? The Fractal IPO is a pretty rare opportunity to get a piece of a high-touch AI services company. But, and this is a big but, the valuation and the current market mood are things you have to consider very, very carefully before making any decisions. And so, here we are, left with the one big question that every single investor has to answer for themselves. Is this a truly groundbreaking opportunity? A chance to get in on the ground floor of the next big thing in enterprise AI? Or is it just another case of overpriced AI hype? We'll find out soon enough when the market gives its final verdict.